Good evening. I believe we are live now. People will just be coming in shortly here because I'm 5 minutes early in starting this. So if you're watching this as a recording, fast forward 5 minutes roughly because I can't officially start for about 5 minutes time just yet. But I can see people are already starting to come in. So good evening to you. Do pop a comment in the comment box and say hi. Yeah, I'm in the corner, I think, at the moment. I've got the camera on at this moment. And so we've got this markets chat coming up. So first things first, let's just see who you are, where you are based in the world as well. So let's see where people are based. Paul, hi. So I know there's a slight lag because I use software to run through YouTube. That's where you have to work it. So there's probably a 10-second delay from when I'm saying something to you actually seeing it. So yeah, do pop in the box where you are based around the world because people are all over the place more often than not. And I've just reminded myself I need to get my pen up. I'm going to need that here. Amazing Arlinda. Good evening to yourself. Paul, you're in Luton. Oh, beautiful Luton. One of my friends is from Luton. Poland, Canada. Hi, Tony. The furthest afield so far. Obviously, people are only just coming in, but there's already a few of us, a fair few of us already. Linda, you're in the UK. Joanne, you're in Norway. So yes, people all over the place. So we can't start for another 3 minutes as yet, because officially we start at 6:30. And I know that people still come in after that, but yeah. So hi, Khaled. So I don't want to talk too much at the moment about the markets. So I want to hold fire a little bit before we delve into that. But yes, as we all know, it's been quite a crazy week, hasn't it? So in the markets. So really, I would say more than that. You know, it it looks. I mean, obviously, it's huge. The market moves that we've had in this past week, especially yesterday, beating some records. But but it's everywhere, and so that's what we're going to talk around tonight. You met me at the London Trader Show. Not recently, not this one. You didn't because I wasn't there. So it's not me, Alinda. Maybe you got the wrong person. Maybe last year. I was there last year, yes, but I think there was one recently. But yeah, definitely last year. Yes, I was there. Yeah. So if I spoke to you then, great. Nice to meet you again online. Duran, bull or bear Bitcoin like 10 years ahead? I think what you mean there is, am I a long-term bull for Bitcoin? I think that's probably what you mean. I guess so. I know I own. I was doing a talk. Yeah, so that was last year. I didn't go to one last week. I didn't want to go. It was non-farm payrolls. Well, I don't want to be at a trading show. I want to be trading. So I was with my traders last week, but there was a show last week. Yeah, but no, it was non-farm payrolls. I wanted to be here. Khalil, you're in Surrey. Bitcoin. Sorry, coming back to Bitcoin. Yes. I'm not a mega ball like some people are in cryptos, but I do see it as an asset class that I need to have exposure to, which I do. So yes, I do own Bitcoin. So you didn't secure 1,000 pips. Sorry, Linda. No, you didn't. I know a guy, you bought Bitcoin and it's gone up $100 today. not 1,000. but well, I guess it would be 1,000 cents. So yes, in that regard, but it's not pips, it's cents. But yeah, so it's gone up about $100 today, hasn't it? So yeah. Psycho Trade Man, hi. I do see. Is it yourself? I've seen some comments on some of my videos. Maybe from yourself. Rings a bell. Maybe. I think I forget there's so many people that I respond to on comments, or I see a comment, so I always appreciate them. But yeah, so I forget. My memory's really good for remembering the charts, but not very good at remembering names. Anyway, I think it's 6:30. We can get started. So the recording's going. There's already plenty of us in, but that usually just carries on ticking up once we get started. So hi, Vladimir from Serbia. Okay, let's get started. Right. Well, good evening, and this is quite an interesting time in the financial markets, isn't it? So, what I'm going to do tonight, first up, just going to give you some of my thoughts, have a look at a few of the markets, and then we'll do more of a Q&A like we normally do. So I'm just going to go through a few different charts and a few different screenshots that I've got here prepared for you. The first thing that I must enforce for anyone who's watching this, whether you're here live or people that watch the recordings, is please, please, please trade safely. And you think, oh, yeah, no. No, I spoke to 2 brokers in the UK here yesterday, and they said literally thousands of customers are blowing up their accounts right now. So because people get excited by the volatility, they start over trading, they don't use stops, or if they do use stops, they might be over leveraged and they're just blowing up left, right, and center at the moment. So please use stop losses and use risk management as well. And also don't get suckered in to thinking that you're missing out, because there's all these huge moves. Stick to your plan. That's it. That's all you need to do. Forget everything else. Everything else is noise. Stick to your plan. Because if you start getting suckered in to the noise and thinking, oh God, look how much, whatever market it is. Well, I've got the S&P up at the moment. No, I haven't got gold. Let's go back to the S&P actually. Oh, look how much the S&P is moving. I must get in. That's the wrong approach to the markets. So you need to stick to your processes, forget the volatility and all the movements, and don't think that all these other traders out there around the world are making millions. They really are not. People might be saying on social media they're making loads of money. They're liars. That's not true. Now, don't get me wrong. There will be people making money, of course, but the large majority of people are losing money. And of course, just think about the people who are on social media who are trying to, you know, say that they're saying all that. Is there an agenda there? What's going on? So, realistically, more people are vulnerable at times like this. So just be careful is what I'm trying to say. Okay, so let's actually delve into the markets themselves. So I'm going to talk a little bit about, I'm not going to go over too much about what's happened. What we really want to be discussing is what next. But first of all, I think what happens next is, I think he's still waiting for the phone to ring. Yeah, I think that, is China going to phone? I think he's still waiting that. So, okay. Right. I had to get the gag out of the way first of all. Right. I see. Get rid of that. Okay. So there's some interesting stuff that's been going on I want to share with you. So first up here, this was interesting. This was just as of last Friday. So when the S&P was coming down, that's last Friday's bar. So that big, huge down bar last Friday. I'm going to talk about the technicals in a moment. What was interesting was actually in the SPY ETF, retail were net buyers to the tune of 200 million, the highest in 13 months. Now, I don't know about you, but from what I know about retail traders, I'm talking about the masses out here. Of course, we are all retail traders, but the masses out there, when retail traders and investors are piling into the markets when the markets are coming down like they are, doesn't suggest to me that we're at a market bottom. And that was last Friday. Yes, we went a bit lower on Monday, but it still screams to me that we aren't there yet. And if I give you another chart, this was on the QQQ, saw $1.5 billion of inflows. Now, I know that there are plenty of measures of sentiment that have got pessimistic in the short term, but what's happened is, if I come out to maybe a weekly chart here, just briefly, first of all, since the bear market that we had in 2022, where we made the lows into the October of 22, the stock market was rising throughout 23, and everyone was, I say everyone, retail were bearish throughout 23. That was a good sign. When the masses are bearish and yet the stock market's going up, that's great. That's what we call the wall of worry, and it's a good sentiment measure for more returns, because you've still got a lot of people who are bearish even as the stock market's coming up. Then at some point they're going to throw the towel in and say, oh, I really better commit some money to the markets. And that's a healthy thing, to have bearishness as a market's going up. But what's happened over the last couple of years, if I take this back to maybe a daily chart now, is that retail have started to learn that every time there's a pullback, I need to be buying. I need to be a dip buyer. Yeah, I will get to that, Gary, but I'll come back to it. Just give me some time. But I will come back to it. Just remind me, put it up again. So they've they've been taught you got to buy the dips, and we've seen that, and hodl. We've seen that in the crypto markets, and so people have learned that must buy the dips, and I'm afraid that, don't get me wrong, as a short-term trader and trading opportunities, there will be, of course, there's going to be long side opportunities. But what I'm talking about with those inflows there, that's people who are committing money to the QQQ, the SPY, that they're looking for longer term returns. And they think, and don't get me wrong, in the grand scheme of things, when the stock markets have fallen 20 odd percent, is it a good point to dip your toe in the water? If you're a long-term investor with a 5-year time horizon, 10-year time horizon, yes, it is. However, what normally happens when there is a market bottom is you don't see that amount of buying. People usually end up buying further up once the stock market has already started going up. So that's the problem that we have at the moment from a sentiment perspective. All it says to me is that we're probably not at a bottom at the moment. Okay. Then the other factors at play are tariffs. So if I now bring up, first of all, this chart here. Now, as of yesterday, this is where the tariff level was. As you all know, what brought the stock markets up yesterday was that Trump reduced all those tariffs down to that 10% level. So from what they were on all the countries around the world. But even at that, we're still at tariff levels going back to the early 1900s. The world was a different place back then. So basically the 1930s, that's about where we're at the moment. So we're still at the world was a very bit different place then. So the point that I'm trying to make is that although the stock market was, had these massive rallies there yesterday, and it's holding here at the moment and all of that, but in the medium term, we've still got 10% tariffs. They are still going to act as a pressure on the US economy and globally as well, on other economies as well. So that is a threat to the stock markets going forwards if the US ends up going into some form of recession and elsewhere. Now, of course, the one thing that we don't know is that whether these 10% tariffs get brought down as well. Negotiations are still to be done with many economies, and I suspect those tariffs will come down further as well. But then we got the flip side. Whatever way at the moment, I can't see the US winning in that they've been trying to bring down the deficits. So if the tariffs come all the way down, then they're not bringing in that tariff income, which was supposed to be paying for what? All of the tax cuts that are coming. So then their debt is going to carry on going up. And I was just reading earlier on, it looks like it's going to go from 2 trillion a year to 3 trillion a year right now. So in spite of everything they've been trying to do, debt levels are going to go even higher. So even if we get the tariffs down, there are still going to be those concerns there for the US economy. So overall, the way that I'm seeing things at the moment is that structurally we've started a process now, or a process has been started by the US administration, which I think it's just brought out some cracks in the economy. And as a result of some of these things, and so I think it's going to take a long time now to flush all that out. So I don't think the stock markets are done, is what I'm trying to say. Now, do I think the stock markets are going to roll over and make new lows today or tomorrow? Who knows? In fact, I would quite like to see the stock markets, if I zoom back in a little bit, I would quite like to see the stock markets hold up for 2 or 3 weeks for this sentiment that we had yesterday, that big sentiment lift, which drove the stock markets up when the whole world breathed a sigh of relief yesterday when those tariffs all were announced, that they were dropping down to 10%. But the problem is, once the relief's done, we've still got 10% tariffs. This is still a problem for the economies. So I don't think they're getting out of a hole anytime soon. Plus, they still want to spend loads of money. Doge hasn't actually materially made any massive savings as yet. So putting it all together, that's my take. So coming over to the charts, is there anything else before I come over to the charts? I think there's a couple of other things. I know I've shown this, and this is my third live broadcast of 2025. Last year I probably did 3 live broadcasts all year, but that's where we are right now. The markets are just so busy. I want to do this, and I know I've brought this up a couple of times now, or a few times really. But when I saw this came out in the autumn, middle of October. Middle of October. At that moment in time, I thought, "Oh, blimey! Is this a sign?" And so I still think it is. And look where we are right now. The envy of the world, just a few short months ago. And now look where we are. We're worried about the US economy and the global economy as well. So, yeah. And again, right at the beginning of this year, we were seeing articles like this. Stocks could gain another 20%, embrace the bubble. So I became, as you know, when I did the last, oops, when I did the last, sorry, someone's chatting in my trading room. I heard a ping in my ear. When I did the last broadcast, I was talking about all that euphoria. And that's why, yes, I was lucky with my traders. Yes, we shorted back up here, the S&P, and we literally came out this week. I got trading stopped out at 5,000 this week on my last position. So I had talked about being short before, and you've heard all of that if you watch my videos. But if the stock market's collapsed, in the near term, well, I'm not going to be in that now. But like I said at the beginning, I just stay with my plan. So stay with my trading plan, and I don't care if the stock market's carried on coming down and I'm not in. I'm in other positions, as some of you all know from my YouTube videos. So that trade's done. You move on to the next trade. Now, overall, if I am bearish overall, the US economy and therefore the stock market, what am I looking for? I could have shorted the stock market last night. I went out yesterday evening, and then all this carnage and the chaos happened, in the stock markets last night. I could have sold last night when I walked in, and the stock markets were closed at that point. Um, but it wasn't my plan. It had come up so fast. We're not used to this. I've been trading 28 years, and I don't remember. I know it has happened. In 2001, we had a massive one-day up day. Even I can't remember that far back now. Not to that specific day, I mean. So I wasn't expecting the stock market to come up that far. So I've got this channel on, this trend channel on my charts. And so I was looking for price to come to the mid channel at some point, and probably have a reaction to it, but I wasn't expecting it to do it in a single day. Um, Overall, I would quite like to see price come up to the upper trend channel line, maybe even do a little bit of a throw over move. So maybe even do a bit of a throw over, come outside. Why do I want to see that? The reason I want to see that is because you want to get the masses all starting to become a little bit optimistic again. Yeah. So when everyone's looking one way, that's when I want to be going the other. So I would my preference would be for the stock market to hold up for a couple of weeks. I don't know what the price action is going to be like and all of that, but somewhere, I don't know, over here is where I'd probably be looking for shorting opportunities. That's how I'm going to be looking at it anyway. But it's very volatile, and you've got to have a wide enough stop in order to be able to trade all of that. Okay, right. Sorry, messages in my trading room whilst I'm sat here. Death cross on the daily chart, where the 50-day moving average is crossing down through the 200-day. So just in the background, just a confirmation really of what's going on technically. I do think that when I come out to the monthly chart, that we came down to a really good level at 4,800. Like I said, I got trading stopped out at 5,000. I was more than happy with that. So it is possible, putting my bullish hat on, is it possible that's it, we're done? That was a classic pullback into the prior highs and bounce. Is it possible that we're done? Anything's possible in the markets, but you have to have a view. And so I have a view at the moment. I'm willing to change that view at some point if the fundamentals change and all of that. But at the moment, I'd see these cracks. And so we'll see how they get plastered over if they do. But I'm not trying to trade for a massive upside move, is what I'm trying to say at the moment. So technically, it's a good pullback. If I come to the quarterly chart, put this back to the SPX here. You look at this. If I turn the trend lines off for a moment, you look at the quarterly chart, and as a mean reversion, from a mean reversion perspective, well, yeah, it's nice that it's come down into that 4,800 zone, but there's a lot of scope for mean reversion. This is the 50 period moving average. It's still stretched away from the 50 in the long term to this day. So there is the scope to come down a bit lower. I don't know how much, but we'll have to see how things develop. But I certainly see the potential for that, given what's going on with regards to the US policies that are going on. I do think that they're going to try and negotiate deals with various economies, all the economies and countries around the world. But I still think there's a bit of damage that's been done. So it wouldn't surprise me if we still see a cooling of the economy, and on the back of that, as we go forwards, not immediately, but as we go forwards, that the stock market still ends up looking for a new low. From a sentiment perspective, as I've already said, the sentiment, just everyone dip buying just over this past week doesn't tell me that we're there yet. As it Warren Buffett said, When there's blood in the streets, you want to be a buyer. There's not blood in the streets if you've got masses of people all buying because they all think, yeah, no, just buy the dip. People won't want to buy the dip when it's come down further. They'll be pausing a lot more, and that's what we want. So in order to create a meaningful low. Uh, Smale, yeah, I'll answer that question in a bit. Right, okay. So at the moment, my preference right now in the near term is actually I'd like the stock markets to hold up. I want them to encourage more people in and send people feel a bit more relief. And I'm talking about when I'm talking about holding up, I'm talking about it'd be really nice if they could hold up over the next week or two. So that would be ideal. We'll have to see, but that would be my preference there. Now, one of the other markets that I've been talking about um, is the euro dollar. So the euro dollar here, um, I think I talked about on the last broadcast, which was only probably a couple of weeks ago. I can't remember, but it wasn't long ago, and I've talked about it on the YouTube videos at times as well. So what's fascinating about the euro dollar? Firstly, it's the world's largest currency pair, so I like trading the euro dollar, as many of you know. Um, what I think is a fundamental thing that's changed with regards to the euro is that when uh, the new coalition, so to speak, uh, won, or the Merz's party won the German elections back in early March. He's then had to form a coalition, which he's done. But when he won, he declared that Germany needed to spend a lot more money, and this is a good thing that Trump's brought about, is that Europe are all across the board massively increasing their defense spending. So that's a good thing because they're spending money with defense manufacturers. It's good for European economy. Germany also announced a 500 billion euro package for green investments and infrastructure as well. All that means fiscal spending, which can be good for the economy. And Germany is a massive economy. So I saw that as a real plus back then. So in my community with my traders at Charlie Burton Trading, we started buying on the dip, on the pullback through here. So we are long the euro. So we've been long the euro. Yes, I was short the S&P, but I'm not anymore. I don't know whether I will get to short it again. It depends on whether it holds up over the next several weeks. So the background story with the euro is that we've seen a fundamental shift. Okay, so a fundamental shift that Germany, it's like a wake up call for Germany, which has been in a slumber for the last few years. It's economically speaking, still a massive economy, but its economy's just, well, really been in a light recession for the last couple of years, but still a huge economy. So this massive fiscal spending is going to potentially bring it out of recession. All right, there are trade wars to be dealt with now, and tariffs, should I say, but we'll have to see. But they're still going to be spending a lot of money, and across Europe there's a huge amount of spending going on. So I see that as a positive for the euro overall. If there's lots of spending going to be done uh, via manufacturing, defense companies, you name it, and on infrastructure projects. So I see that as a positive for the euro. Then you take the flip side, which is the US dollar. You've got an administration, Donald Trump's administration, have actually been quite open about saying they want a weaker dollar. And that's exactly what we're getting even today on the inflation news that came out earlier on. But we can talk about that separately because inflation is expected to tick back up on the back of tariffs. So, but for now, the administration are sort of getting what they want, which is a weaker US dollar, and there's many measures of the weaker dollar at the moment. So if I, for example, come down to the dollar Swiss, which had a massive move to the downside today, the Swiss franc is a safe haven currency. So normally in times of market stress globally, where does money go to? Typically, as far as the currencies are concerned, the Japanese yen, the Swiss franc, and the dollar. Right now, the dollar is not having a good day. Swiss franc is, because this is the Swiss against the dollar. So the dollar's going down against the Swiss franc, also against the yen here. So the yen is outperforming the US dollar, and of course the euro, because the euro is the second largest global currency, and so we're seeing monies moving into the euro preferably against the dollar, and hence why the big moves in the euro there today as well. So going forwards, I am looking for, this. I still see this as a move that's in its infancy in the big picture. And I appreciate many of you are day traders, very short-term traders, and it's not really going to be as appealing to you. But all I'm going to say to you is that until proven otherwise, as I often use that expression, so unless the euro dollar is way back down sub 106, I'm going to continue to trade it on the long side. I'll be at times in and out because it will hit resistance levels, and I'll want to bank some profits and then get back in and do all of that with my community. But I see the scope for the euro dollars to go to 120. So we're only at 112 at the moment. So there's loads of upside scope. Now, how long that takes, who knows? In this sort of volatile world, it could happen in 3 weeks, but we'll have to see. But that's my playbook, so to speak. My playbook is a weakening dollar story. That's what the US administration actually would quite like, to make their exports cheaper, and actually a reinvigorated Eurozone to an extent, being led by Germany in that regard. So on balance, yes, we've got a US economy which is, we'll have to see. I mean, it's still a huge economy, of course, but just having a bit of a reset maybe at the moment. And I'm not saying the European economy is not going to be affected by tariff wars, but it's sentiment driven as well. And there may be market flows coming out of the US, out of treasuries to an extent, and certainly out the stock market, moving across into the Eurozone predominantly. So I'm looking at a big picture play for a run back up into this zone up here. I'm calling it 120. But it's a whole zone around there, around that area. Now, like I've said, I'll still pick off some levels along the way. I think about 115. 115 is a level that I would probably be looking to, if the euro can go to 115, to bank some profit at as a take profit, partial profit zone. But overall, that will be my playbook, will be the euro dollar towards that. Unless, of course, it all rolls over. And like I've said, but it would have to roll over, by my estimations, somewhere south of 106, 105 zone before I'd say, okay, something else is going on here and maybe the euro is going to do something else. So there you go. I wanted to give you my playbook there generally for the likes of the euro. I think that the other currencies against the dollar are going to do well as well. It won't just be the euro, because this is a dollar theme as well, a weakening of the dollar. So even the pound here is strengthening. So I suspect I'm looking for the pound to carry on building against the dollar. But personally, I'm trading the euro. But even the likes of the Aussie, which has been weak here in line with US equities and the whole China story, uncertainty at the moment there, but even that's bouncing back quite well. And likewise is the New Zealand dollar as well. So whatever way I slice it, the way I'm looking at the markets in general is I would like to see the stock markets hold up, but ultimately I'll be looking for another shorting opportunity at some point in the future, in the coming weeks ahead. And I'm generally looking, I'm a bull on the currencies against the dollar. These are the trends. I'm just going to carry on trading these trends until the trends are over. So there you go. Right. But the reason I wanted to come on tonight was also to just convey that message across to people. And I know I'm preaching to the converted, but please don't get overexcited by the markets. People in this environment think they're missing out. You see a day like that, look at the euro there, or look at the stock market, wherever, you think, I'm missing out, I've got to do something. And then they jump into trades. They're not trading on with a plan at that stage. They just feel like they've got to do something. They start over trading, and that's when the losses come. So my key message today for anyone who's watching this, there's 120 people here live right now, and there'll probably be a few hundred more who will end up watching the recording. And it might even be more than that, because I think this is coming through the software, because it always shows me as being more afterwards. But if I can convey that message, and I know for most of you, you're fine. But when I speak to brokers, like I said, I spoke to 2 brokers yesterday morning. They said, oh, it's carnage out there. They don't want people losing. If people blow up their accounts, the broker's got to go and find a new customer. They don't want people blowing up their accounts. So it's a myth that people think that brokers do. No, they don't, because they aren't earning their commissions. They'll earn a load of commissions. If you go and do 100 trades in a day, yes, they're going to earn a load of commissions off you. But if you blow up on that day because you've done 100 trades and you walk away and say, oh, I say I'm not trading anymore. Well, yes, they've earned some commission there, but they're not going to have, the future commissions from you just steadily trading away. So brokers don't want people blowing up, but that is what the nature of human beings, and that's what they do. So if I can say, don't get overexcited, stick to your plan, don't worry about all the noise, as I've already said. The noise, you're going to be bombarded on social media from people trying to make out they're making millions and millions and millions. Ignore it. It's nonsense. Just stay with your plan. And yes, there are opportunities to make probably more bigger returns right now in this sort of environment. The opportunities are there because the speed of the movements is there, and the ranges are bigger and all of that. But don't allow yourself to get overexcited by it, because that's where the danger is. Because but in the main, like I've said, I've heard of lots of smart money traders who have got caught in the bond market fallout as well. Or we know about hedge funds. Just yesterday, there was a lot of problems in the bond markets there yesterday, and really, it was the bond market that cracked yesterday. That Trump was forced to bring those tariffs back down, because basically the structure of the bond market was getting very, very dangerous to cracking. So they had to. Right. Okay. The spreads on what markets, Ashkin? Well, I'd recommend Tickmill. Tickmill are one of my preferred brokers. They're really good, tight spreads, very, very good. Yeah, check them out. They're on my YouTube channel here. There's a link to Tickmill on the channel. I don't know who on the indices. Oh yeah, but that's going to happen. When you've got the stock market. If I come back to the to the stock market, they're rallying back up now. When you've got this sort of volatility, spreads are going to widen out. So don't moan about it. Relative to the size of the moves, I'm sure they were still relatively small. You've just seen them widen out. Yes, but that's natural. This was highly, highly volatile markets and environments, so spreads will widen out. So you can't expect market spreads to be what they were, a week ago or 2 weeks ago when you're getting this sort of volatility. So yeah, it's all relative though. You pay a wider spread, but then the moves are much bigger, aren't they? Okay, let's have a look at some questions here. Roman already made that mistake, Charlie, on Tuesday. I don't know what that refers to, Roman, but by all means do say. Thank you, Blambuster. That is much appreciated. From your experience, do you think a trader can have an edge purely based on technical analysis? Yes, I do, Smale. Especially with short-term trading as well. Absolutely, yeah. Predominantly, I would say I'm predominantly a technical trader. Yes, I do use market sentiment, and I'm aware of all the fundamentals that are going on. But first and foremost, I would say I'd categorize myself as a technical trader. So, yes, absolutely is the answer to that. Gary, oh good, you've just done me a favor. You've reposted. You got excited and blew one of your accounts, Roman. There we go. Thank you for letting us know that, because you won't be alone. There'll be thousands and thousands of people around the world who will have done that in recent days. So that's, I understand it, but for your personal growth, you've got to try and stop yourself from doing that. So, yeah, have a plan, have a process, follow the process, ignore the rest of the noise, because you're going to be thrown all this noise, news at the moment, which creates what? Temptation. And all you end up doing is getting tempted into trades, and that's your next loser right there. So, yeah. Timmy, nice to see you. Right. I'm just going to go to Gary's question first of all, because he asked this at the beginning here. CAD yen. Let's go and have a look at CAD yen. Have I got CAD yen on my list even? Yes, I have. There we go. Right. I don't look at CAD yen, admittedly, Gary, but I'll have a look for you. Looking for buys on a 4-hour chart. Given the strong impulsive move from yesterday. Okay, if you were long at 103.13, we're currently long at 103.76. You're saying, where would you take your profits? Is 104.90 a stretch? Well, it looks like it was at 10. I'll come to the 4-hour chart now. Okay. Yeah, so you're trading this on a 4-hour chart. So you've got long here this afternoon. Is 104.90 a stretch? Well, this is why you need to do multiple time frame analysis, not just on an hourly chart. Sorry, a 4-hourly chart. Do I think it's a stretch? Well, it depends. And it depends on what sort of trader you are, Gary. So what I mean by that is, I could be talking to someone who doesn't like being in a trade for more than 48 hours. Well, if you don't like being in a trade for more than 48 hours, I would say it might be a bit of a stretch, and you might want to target, you got in at just above 103. So you might want to target this price area here. Okay. So a bit above 104 in the low 104s. So, but if you're someone who doesn't mind being in a trade for several days or a week or so, it could be up. Don't get me wrong, it could still get up there in 48 hours, but it could also muck around and take 5 days or whatever. So as always, you have to ask yourself, well, who am I as a trader? Because different traders are going to have different targets. Another trader might say, oh no, I'm targeting this up here. And no one is right or wrong. It's just how your approach is. The further your target away is, the longer you have to be prepared to stay in the trade for. That's it. So, do I think essentially 105 is a stretch? 104.90, not particularly, but it might be for you, depending on whether you like holding on or how long you like holding on for. So I can't really help you too much. I think overall it's quite a messy chart, to be honest. When I'm looking at the daily time frame down here, it's not saying too much to me at the moment, but it was admittedly a lovely bar there yesterday, a nice candle there yesterday. So yeah, hopefully it comes up. If the best advice I could give you would be to possibly bank partial profit and try and hold on to some, because if it gets back up to 105, I suspect it will break out. So there you go. What do I think about using swap-free broker accounts? One of the worst accounts that you could go for, Psycho Trade Man. No, I'm joking. Okay, let me be brutally honest to you about swap-free accounts. Swap-free accounts, I understand they were created for, I think it's for Muslims actually, isn't it? Muslims aren't allowed to receive interest or pay interest on things. So I think it comes under that rule. So so they couldn't trade all the time they're paying swaps or receiving swaps. So what brokers did in order to enable Muslims to be, devout Muslims to be able to trade, they created swap-free accounts. Now, the problem is swaps are a real thing. So you can't not have swaps, because that's what has to ultimately get paid up the line up to the true market makers, which are the big banks, the institutional banks. So swaps are a real thing. You can't not have them. However, brokers, what they've done is they've created swap-free accounts, but what they do is they get the charges off you. They're out the back end. So yes, you won't see swaps on your account, but they have to get that money somewhere, because they've got to pay their market makers, their liquidity providers. So it'll just get charged off you off somewhere else. They might widen spreads on you. They might have slightly worse execution. Whatever, they'll have to make that money off of you some way or another in order to pay for it, or they just B-book you. So then you just on a B-book account in order for that to happen. What I mean by that is that your trades aren't actually going through into the real market, and so the broker's just taking your trade like a casino and just taking the wager that over the long run you won't make money. So yeah. But I respect the fact that people do want swap-free accounts, but just realize that there's no free lunch. This is a genuine thing. It's a bit like filling up your car with gasoline or petrol, whatever you want to call it, and then someone saying, "Oh no, don't worry about it. It's free." And you're thinking, yeah, but it can't really be free. What's the catch? There has to be a catch somewhere. So maybe they charge you double the price for your car. So yeah, don't worry about it. Unless if you need swap-free accounts for your religion, then fine. Then you're going to need to do that. All I'm saying is they have to get the money back some way or another, because it is a real, a true cost in the markets. Okay, hopefully that's answered your question. Oh, I think you've even answered the question yourself there, Psycho Man. Right. Gary, coming back to yourself here. I'm comfortable holding for 3 days max. Typically, trades last between 4 to 5 hours. Right. Okay. There you go. And I think it's really important. I often say you've got to know who you are as a trader. So whether you're a day trader or you're a swing trader or a position trader, you've got to know who you are and what's right for you. So don't get me wrong, you can evolve as a trader. So at the moment, Gary's saying, yeah, a maximum of 3 days. Now, that in 2 years' time, Gary, you might be holding trades for, 7 days. But you will evolve and you'll change. You'll get used to, oh, actually, I want to hold on to these trades a little bit longer because I can make more money out of the trades when they have a big run. And I've actually looked across all of my trades and I'm leaving a lot of money on the table by closing out. All of that sort of stuff. You might find that you evolve as a trader, but it doesn't really matter. You could stay how you are trading. I think that's an important thing. That's what I was making the point on the charts. Someone can say to me, where do you think the market's going to go? Well, where should I bank profit? Well, that depends on you, because if you don't want to hold on, then you might as well bank the profit here, way down here, so you can get out sooner. So depends on the trader. Yeah. Oh, we're going to have a look at gold. Yeah. Gary, do you believe in backtesting? If not, how do you come up with your edge? Is it through experience and time in the markets? It's a bit of both, really, Gary. I do believe in backtesting. So in answer to your question, yes, I do believe in back testing. But I think it's one of those things that you have to put into some form of context. It's not, backtesting is not the holy grail. And I think as long as you see backtesting as a really useful tool, but it's not the holy grail because you've backtested it. So until you've accumulated a load of forward live trading on that backtested system, whatever, then you won't know for certain if how it's going to get on in the future, because you've backtested something on let's say the last 10 years, and yes, it works well on what price was doing over the last 10 years. Price might move slightly differently over the next 10 years, and your wonderful little system you've created is as good as a chocolate teapot. So but nevertheless, backtesting gives you a foundation for your entry techniques, stop losses, targets. So yes, absolutely. So yes, I backtest strategies that I use, but I've been using them for so many years now that I've got that, as you say. What was your question here? The experience of using them in the markets as well. So yeah. But yeah, I do believe in it, but don't see it as an absolute holy grail. It gives you a foundation, and then you've got to then move forwards and see how it gets on in the future as well. What's my current outlook on gold? Right. Let's come back to gold. Well, again, when someone asks me this, Dendever, right? So I can give anyone my outlook on a given market, like I've just done on the stock markets and like I've done on the euro dollar there and the other currencies. But it depends on your time frame, like just my answer there to Gary. So, I could say, yeah, I think gold's going to go to 4,000, but that might take, for all I know, might take a year, might take 2 years. So again, it's your time frame, how you're looking to trade something. So overall, if you just asked me a very open question, what's my current outlook for gold? Overall, it's in a great trend, and I'm overall bullish towards gold. Okay, so I think again the fundamentals are there. We talked about the fundamentals at the beginning when there was fewer people. We're now 150 people in the room here. So we've seen central bank buying of physical gold over the last year, 18 months. That's what's been really driving the gold market, not retail. Retail haven't only just started waking up to buying physical gold. With the global uncertainty that has started, I think gold is a great asset to hold as well for that reason. So I think that over the medium long term, gold's should outperform with everything that's going on in the world right now as well. So people are going to be parking money in gold as a a bit of a safe haven investment as well. So, but that's my big picture. If you might be looking at it saying, "Oh yeah, but I'm looking at an hourly chart, Charlie." So that's very different, of course. So if I come back to the chart overall, um, it's in an amazing trend. It has only just come back pretty much and retested this high. So it's just done that down here. If I wanted to be a buyer right now, I'm not. I do own physical gold and silver, but I've owned them for years, like 2017, something like that. I think I bought. Where was I? If I wanted to trade gold now, would I be buying it right now? Probably less so, because the horse has bolted a little bit. I do see a bigger picture in it. I think I would have to be patiently waiting for the next pullback, is how I would be looking at gold right now. But I am long-term bullish towards it, because I think there's going to be, and there already is with gold, there's been a big fundamental shift in buyers towards gold and seeing the value of it as a hard asset. And in times of uncertainty, gold benefits. And I don't think retail are that long gold right now, which is a good thing for the long term as well. So there's plenty of scope for retail to still be coming in. So, but don't get me wrong, I would rather be a buyer on pullbacks. There you go. Blambaster, with your swing trading style, using the daily charts with small position sizes, do you have tighter stops to capitalize larger risk to rewards? Are you saying, using daily charts with small position sizes? Do you have tighter stops to capitalize larger risk reward? At the moment, no. Then my stops aren't. Look at the euro now while I've been talking. My stops aren't that tight. No, I mean, I do use multiple time frame analysis. So over the years, I'll get into a swing trade off an intraday setup, Blambaster, at times, and then I can have a slightly smaller stop. But at the moment in this market, funny enough, in my trading community, we added to the euro position today. I'm not going to tell you exactly where and where our stop was, but our stop was the best part of 100 pips on that. So no, we're not using tight stops, not in this market. You're too much at risk of just getting chopped out on noise, really. So no. So on the euro, about 100 pips is quite common for me at the moment in this current market condition. I've been having a fair few trades on the euro, which have all been that sort of stop loss. But coming back to the risk reward component, because my targets are far enough away, then the risk reward profiles are still really good. So I don't care if I've got a 100 pip stop or 150 pip stop. If my target is 500 pips, 700 pips, 1,000 pips, what does it matter? So yeah, hopefully that answers your question there. Did you do a market brief at the start? Yes, I did, Timmy. Yeah. It'll be there once we stop tonight, and I've pressed stop. Usually within about an hour, it will appear on my YouTube channel, because YouTube has to process the whole video. So I don't know how long it takes, but within an hour normally. Are you still taking a DCA approach to Bitcoin in this environment? What does that mean? So what's a DCA approach? I don't know. You'll have to tell me what that means. Gary, in my experience, dollar cost averaging. Yes, I am. Yes, I am indeed. Yes. Yeah, because I still want exposure to that asset class. I don't mind if Bitcoin goes down, because I want exposure to it over a longer period. That's more of a long-term investment over years. So yes, I am dollar cost averaging. Yes, still. Gary, in your experience, would you say it's wise to aim for monthly percentages and stop trading if the target is accomplished, e.g., 4 or 5%, even if a setup appears, uh, although you've hit your monthly goal? This is a fantastic question, Gary. um, I'm laughing because it is a really good question. The reason I'm giggling is just because this is a common question, and reason I'm laughing is because I know what I'm about to give you as an answer, and the answer is I don't like doing that. So that's why. So is it wise to aim for monthly percentages? God, these markets are crazy right now. Look at it. I mean, the euro dollar's up 2.6%. Who needs cryptos at the moment when the currencies are moving like this? So I haven't even looked at my P&L on the day. Dare we look? Do you want to have a look at one of? Shall I have a look at one of my P&Ls? I trade about 6 accounts, but it's doing all right. It's doing all right. Okay. Coming back to your question, would you say it's wise to aim for monthly percentages? Right. Okay. The problem with having a target-based approach, Gary, in all seriousness now, is exactly what you're saying. Do you stop trading once you hit your target? The reason you should never stop trading once you hit your target is if your target is at 5% and you know your equity gets up to 5% and you stop trading. You might find that, oh, if you had have carried on trading, so you hit your 5%, great. Yeah, wonderful. Okay. Just park that thought for a moment. But if you had have carried on trading, maybe that particular month, it would have been an 8% month, let's say. All right. If you'd carried on following your trades. Right. But you didn't. You took, you came out at 5%. Next month, you're having a losing month, and you are going to have losing months. I'm sorry to say that you will have losing months. So if you have losing months and you lose 5%, well, fair enough. They've evened themselves out. But if you had carried on trading that month before and made your 8%, it still would have paid for the losses. So my point is, you should never restrict yourself to a target. It's an arbitrary number that you've made up. So don't do it to yourself, because there's always going to be those outlier months where you're going to have a bonkersly good month and you might make whatever 15% in a month. But if you'd have stopped at 5, well, you need that extra sometimes for the rainy days. And of course the other risk is, well, what if I carry on trading and I give it back, my gains back? Yeah, well, that's trading. You're a trader. Don't confine yourself to those sorts of rules, because we should trade time throughout the year. Don't confine yourself to saying, oh, it's the summer, so I'm not going to trade, or it's Christmas, I'm not going to trade. Obviously, you're going to have times that you're going to have time periods you're going to have time off, but if you start putting all these rules in, then it could just be when you stop trading that you would have had a bonkersly really good performance. So I think you need to have a pragmatic approach to trading. Forget targets. I friggin' hate targets. I think they're limiting. Targets limit your focus to, oh, I've hit a target, I'm coming out now, or I'm not going to trade now, whatever. I think they're a dangerous thing. And so I think you should trade all year long. Whatever the performance is, month on month, is the performance. That's the outcome. What your job is to do is to follow your process and follow the control, use the controllables. The controllables are you following your trading plan, your stop losses, your targets, just trading. Yeah. The uncontrollables are the end results. You can't control that. One month you might have a really good month, one month you might have a bad month, etc., etc. But if you limit yourself to, I'm only going to come out at 5%. It could be those 1 or 2 months in the year that would have otherwise been a 15%er, which you're going to need to pay for the losing months, because you're going to have those as well. There you go. Okay. Right. I'm just making sure I'm not missing anything. Leopold, hi. Hopefully that's answered your question okay there, Gary. I do hope. Joel, I think I know who that is. Right. Anyway, back up. Leopold, even more people in right now. So maybe, anyway. I've not invested in gold and I live in a euro economy. Yeah, considering euro is more likely to gain against the dollar, amid that weakens the value of the gold for me. Might be time to see. Yeah, okay. Well, euro's outperforming gold, so you might. I can have a look at gold in euro denominations. I've probably got it on my chart here. I would have had it at some point. So this is gold priced in euros. Not I go back to the gold price now in dollars, breaking out there. So it's a valid point, Leopold. But what you could still buy a gold ETF which is priced in dollars and do it that way. You're going to benefit from the currency being in the euro anyway, so when you repatriate back, so you can still do that. Right, JP, did you also backtest adding to your winners? What is your risk reward and win ratio? And 3, are strategies like yours prone to stop working? I'll answer the last question first. No, the strategies like mine are not prone to stop working. Why? Because I trade using entry techniques and overall strategies, yes, but I'm also coupling them with what's actually going on in the market. Sentiment, fundamentals, multiple time frame analysis as well. So I'm bringing it all together to build a story. So no, I don't trade with blinkers on. Just like, oh right, I've got a strategy on a 5-minute chart, and when a bar does this, then I buy, and this is my stop, and then I come out here. Yeah, that's the sort of stuff that is susceptible to just disappearing over time. I don't trade that way. So that's the last answer. Did I backtest adding to my winners? No, I didn't actually. What I found, it's not because, in a way, I guess I did, because I do have rules of where I want to exit. So when I've looked at my trading over the years, and I've said, right, yeah, I've got all of these trades, and I can see where I've ran these trades from here to here, right? So all I've done is I've taken all of that evidence, that real trading evidence, and said, right, okay, so if I'm getting in here and here, I need to be adding some in the middle here as well. So in essence, I guess in a way is back tested, because I have been, I know that the markets went from here to here and I was in those trades. So all I've done is I've taken that evidence and said, right, well, I need to be looking for places to add along the way, and then I'll be using my entry techniques to add. So, but not with sitting down with a spreadsheet, because that's not how I trade in that regard. But yes, the biggest trading years I've ever had has always been when I've had a big add-in trade. Yeah, always. So the biggest returns I've ever had is always been on add-in trades. Yeah, massive. Yeah. Okay. Joel, so would you move your stop up and let it carry on going? Oh God, I've missed this now. What's that in respect of, Joel? Is that the euro dollar? or gold, or I don't know, Joel. What's in what? Sorry, I need to come back to your question. So, in what market are you referring to? Lisa, Bitcoin now on a death cross. Any technicals wise? Yeah, Bitcoin's gonna. My assumption overall is that Bitcoin, all the time the stock markets are not doing so well, then Bitcoin won't as well, Lisa. So that's my overall view on that. Okay, so I've not seen another Joel come back to me. So, but generally speaking, when it comes to trades, I will move my stops up, but not like most retail traders. Most retail traders can't wait to get their stops to break even and then locking in profit. There is a point when I would do that, like on the S&P right down here, when I exited the S&P earlier this week, I trailed that stop down aggressively to 5,000 because I knew we'd been to pretty much to 4,800, and I knew that we were in the bounce zone. So I wanted to stay in with that entry if it just collapsed, of course, but at the same time I was aggressively moving the stop down at that stage. But I'd been short from way back up here. Um, So more often than not, I'm not aggressively moving my stops. Not until I get to the last bit, like that example there of the euro dollar. Then I might move it right towards the end if I'm getting really close to an exit point. But generally speaking, I want to give my trades room to breathe. So I want to hold on to my trades. I don't want to just be trading stopped out and only for the price to then carry on going higher. So I'm not bothered about price retracing against me and doing all those sorts of things. So yeah. Good, Gary. Oh, sorry. There's some more questions above. There's lots of questions coming in. You have a lot invested in gold, Leopold, since the early 90s. Wow, is that right? Since early 90s? Considering I live in a euro currency based economy, might be time to sell some. Yes. uh, yeah, well, yeah, but even if the euro gets stronger against the dollar, Leopold, gold will still carry on doing well, as I've just shown. It's still doing well, even in euro terms overall. So, yeah. Right. Mikhail, my problem is 1 to 2 months follow the rules and discipline, but after coming angry and blow account. Yep. Um, you fail challenges 1.7 year. I don't know quite what that means. If the best advice I can give you is don't do prop firm trading. Don't do it. Don't do it. It's a casino for them to make money out of you on challenge fees and tight rules. They know that even if you pass your challenge over a period of time, you'll end up getting clipped, and then you'll have to start all over again. That's my advice. Don't listen to me at your peril, but don't do it. Get a proper brokerage account with a small amount of money and build it over time. That's the holy grail that they're presenting to you, and all the social media stuff. They all get given free accounts and all this. It's unregulated. It's dirty. Don't do it. You're falling. You're becoming a sucker for them to just make money out of you. Don't do it. How many screens does a retail trader need to have? One. Depends. If you're a swing trader, you can see two of my screens here. I've got a third one here, which you probably can't see. But if you're a swing trader, you only need one screen. And again, it depends on the size of the screen. I can't remember how big mine are, but they're reasonable size. You can sort of see. I don't know how big they are, but that there you go. Does that? I don't know, 38 inches, something like that. So I've got three across my desks here. So But that's because I need to multitask. I have got a trading room that I'm in. I've got my emails there, and I've got my brokers here, and I have my charts here. But I don't have multiple screens for charts anymore. I used to years ago, but don't need that. So as a swing trader, one screen. But ideally, yes, two decent sized screens would be good. So you have one for your charts, and then one for your broker and whatever else you need. There you go. Joel, I did answer your other question, but you didn't come back to me. When I was talking about targets, get to 5%, but letting it go to possibly 8%. Yeah. Would you put the stop at your exit target? Oh, I see. Right. Okay. Now I understand your question. The thing is, Joel, that's not the question. Gary's talking about stopping trading. So yes, maybe coming out, but then no more trading for the rest of the month. And so that's what I'm talking about. You don't just stop trading. So no, just you again. What you're talking about there, Joel, is that's very arbitrary. You're imposing your own will, saying, well, if I move my stop up to the 5% part, if it comes back down to 5%, I've still got my 5%. No, don't have targets. It's crazy. And so, you know, what Gary's question was, I think it was Gary that asked the question, was should I stop trading once I've hit 5%? That's my target. No, I don't even want you to have a target. Not really. You can have an overall one at the back of your mind, but don't confine yourself, box yourself into a target. Keep trading. Not this month, not next month, all year, every year for the next 40 years. You just keep trading. Don't pigeon yourself into a box. So you've got to keep trading. Don't stop just because you've hit some arbitrary level. Okay. What is better, trading journal? Record video every trade, or make Excel journal, or use website journal? I don't really care, Mikhail. Whatever suits you. So whatever suits you. Spreadsheets are absolutely fine. If you want to use some sort of website-based one, that's fine too. If you want to record videos of it, that's fine too. Whatever suits you. I just journal mine in a spreadsheet, but again, that's the sort of thing. It depends on the person how they want to do that. Hit Paul. Being a UK resident, would it be better to trade futures or CFDs? With forex, is there a certain time zone to look for when trading intraday? Okay, two questions there. You can trade either futures or CFDs. There's not really. People who trade futures like to say, "Oh, you're trading on an exchange, so it's better." But CFDs are not the Wild West anymore. Most CFD brokers are routing your trade through into the genuine FX market anyway. So you are trading FX. So yes, it's spot FX. It's not a central exchange. People like to say, "Oh, there's no central exchange." It doesn't make any difference. The prices are still the same. So yeah, personal preference really. So I trade spot FX. So for intraday trading, is there a certain time to look for when intraday? In this world that we currently live in, I would be saying, well, yes, the US session. So the UK afternoon and evening. Historically, FX used to go dead at 4 p.m. UK time at the London fix. Not always the case, that really in this day and age, and it hasn't been like that for a while now. So, but yeah, typically, around 8 a.m. UK time in the morning, that early time, sort of between sort of 7 and 10, but closer to 8 a.m. So 8, let's say 7:45 till maybe 9:30, something like that, and then the US session in the afternoons because there's so much volatility comes in the afternoon. What do you think about partial profit take? Yeah, I like that, Roger. Like, for example, 50% profit take at one. Oh, no. Then I read the next part of your question. um, 180 people are here now. Wow, the numbers just keep going up. What? 50% profit at 1-to-1 risk reward. Then you move. Then your stop loss becomes break even, even without moving. Yeah, I get that. Yeah. Roger. I like partial profits, but it depends. The answer I'm going to say, have you tested that? So because banking again at 1-to-1 risk reward might well be fine for your strategy if you're applying a given strategy, but just go and test it, because you might find, oh God, I'm leaving loads of money on the table by banking half when it gets to 1-to-1. It might be, yeah, bank half at 1 to 1.5 or 1 to 2. So I would go and encourage you to go and have a look at that. Don't just do it just arbitrarily at 1-to-1. Okay. What broker do you recommend if you want to use your services to connect accounts? To connect accounts. I don't know what you mean there, Tommy, but I recommend, generally speaking, Tickmill. If you're talking about my funds, because my members can have an account connected to my funds, then there's a specific broker, and that's Pepperstone, that we use for that. Cool, Joel. Cool. Okay. Mikhail, you have a question. I feel can make more risk reward, but my problem is I can't hold. What is the problem? I don't believe, and I need to backtest. A question mark. You feel that you can make more risk reward, but your problem is you can't hold on. What is the problem? Yeah, it's a psychological problem that you've got. So yes, you don't have confidence. That's what it is. Confidence in the trade once you're in it. So you think that you could make more risk reward, but you haven't tested it. So what I would do is go back over your old trades. Hopefully you've logged them and journaled them, and look and see what happened to those trades after you exited. Go back and have a look at them, and also back test it as well. So yes, absolutely. If that's a good positive for back testing, is it gives you the evidence to say, look, I need to hold on to my trades more. So that's the good thing with back testing. So I would encourage you to test that. Yes, but it's a confidence issue. If you're finding yourself jumping out early, then you've got to start using self-talk. Start saying, look, I can't afford to bank this profit right now. Bit like Gary earlier on, if I bank this profit and I come out, it's not necessarily going to pay for those losers. That I know I'm going to have losing trades as well. So you need to use more self-talk to say, I genuinely can't afford to come out of this trade. That's coming outside of my trading plan. And my job as a trader is to stay with the plan. I've already told you today what my plan is with the euro dollar. And I will stay with that plan until it either fails and it all rolls back over and I get stopped out, or it goes to the targets. And I won't be doing anything in between other than maybe adding some more, but I'll stay with the plan. That's your number one goal as a trader, is not thinking about the money and percentage returns and all of that. Your goal is to follow your process. That's it. Everything else is outside of our control. So you got to keep reminding yourself of all that. Your job, stay with the plan, whatever that plan is, whatever the target is, whatever the exit approach is, stay with the plan. Don't deviate from the plan. Okay. I'm not sure you had a previous corporate career or not, but if you did, could you please give some tips and advice to go full time in FX? You've lost for 4 years, but the past 8 months have been 5 to 8% consistently on a monthly basis. Well, that's, first of all, congratulations, Gary. That's really good, really good. Like I said, though, don't limit them. Don't start stopping trading and all of that. One thing that I firstly, Gary, that's really good. Secondly, though, you will have a losing period for months. I'm sorry to say this. And the good thing is you've been there before for the first 4 years while you were finding your feet as a trader, but you will still have drawdowns. So it's great that you've just had, how many months was it? 8 months. You've just made money consistently for the last 8 months. But it will happen. It's just the law of averages. You will have a drawdown period as well. So then you have to ask yourself, well, how will I feel about that? From a monetary perspective, can I deal with that? Because at the moment, you're probably thinking, oh, on 5% a month, I can make X amount, da, 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 da. And that's what people do. And then they say, right, so I can then have that as an income, whatever. And they don't allow for drawdowns because you're extrapolating the recent past and then projecting that into your future. You won't make 5% a month every month forever. Sorry, it won't happen. You're going to have losing periods as well. So you've got to be able to allow for that. So my advice to you is, I came from the corporate world, Gary. Yes. So when I went full-time trading in late 2001, so my tips and advice is, have a pot of money, preferably 18 months to 2 years worth of cash sat in the bank to pay you a salary. So in actual fact, you don't need to touch your trading account now for the next 2 years. So you're taking the pressure off yourself, because trading is all about pressure. So, and how people deal with the pressure. That's where people get emotional. That's where all the mistakes come from. So you're putting yourself at risk if you say, right, I've got £40,000 in a trading account and I need to make 5% a month, or however much you've got in your trading account. £100,000. All right, £100,000 in my trading account. Yeah, on 5% a month, great. I can make an income from that, blah, blah, blah. Yeah, but what if you're going to have a 3-month drawdown period? Oh, God. And the psychological effects of that as well. That then gets compounded. The psychological drawdown, so to speak, becomes compounded. So you've got to allow for that. It may not happen next month, the month after, whenever, but at some point it's going to happen. So you've got to be able to deal with that. So the more you can take the pressure off yourself as a full-time trader, the better. So there's different ways of taking the pressure off. One is you've got cash in the bank to just pay yourself a salary for the next, preferably 18 months to 2 years anyway. And then you can just concentrate on the process of trading, building the account up more, etc. Two, maybe, I don't know if you've got a partner or whatever, maybe your partner brings an income in and that can pay the bills. So again, that's taking the pressure off as well. But my main advice is, don't put yourself in a situation where you're under pressure to make that 5% a month. It won't work, because once you're in that world of, I've got to make 5%, I've got to make 5%, it'll fall apart. So I'm sorry, I don't want to be a damp squib. I'm just trying to give you some general advice. The best traders don't put themselves under pressure. Maybe have a part-time job, whatever. Don't do it full-time if you need X% every month, because the pressure will turn you into a bad trader. Right now, you're a good trader, but all these other things will creep in once the pressure's there. So that's my main advice. But I've got people who have gone full-time trading, but again, they don't put themselves under pressure. They've got partners who work. They've got enough capital behind them and all that. You spend 19 months trading, zero profit. You're 25 years old. Your brain doesn't work. This is a period in trading. Yeah. You're. How long do you say? 19 months? It's not that long. It's perfectly normal. Most traders don't make any money in their first 4 years. So yeah, you're about halfway through there, Mikhail. Keep going. is my advice. How long do you see yourself trading for? Ao Yi, I will. Trading is my passion, so why would I stop trading? The only time that I'll stop trading is when I'm so old that I don't want to trade anymore. When I lose the passion for it. Bearing in mind I've been trading 28 years and I'm still passionate for it, so I don't see myself stopping trading anytime soon. No. They always say do what you love, you know. So if you do what you love, you never want to. There's no need to retire, is there? Why would I want to retire from doing something I love? So yeah. What's your biggest ROI if you feel comfortable to share? Return on investment. It depends over what time frame you're talking about there, Durand. Really, bearing in mind from when I started, so probably from when I started to 2013, that was the milestone year for me because that's when I got to seven figures. So that would be probably the big milestone. But on an individual trade, I don't know. I've had some return on investments. It depends. These days, my risk per trade is not that high, so I don't aim to make big, huge percentage gains every year. So, but what's more important to me is risk reward, and I've certainly had a 1 to 54 risk reward ratio trade, and probably plenty of others around that sort of area and lower, and probably some more than that when I take into consideration adding in. So I've had some very big risk rewards. That's the stuff that I like. ICT concepts, load of nonsense. Can you say your risk reward and win ratio? Every trade is different. I don't trade mechanically like that and say, yes, my risk reward ratio is 1 to 3. The trade that I just came out of on the S&P was about 1 to 9 risk reward ratio, but there could be other trades where hopefully the euro dollar collectively with all the inputs will be a 1 to 20, 1 to 30. So they're all different. Depends on the trade. So what is biggest difference from trading now to 20 years ago? Social media, Durand. Yeah. The social media, sorry, messages. That's the biggest difference, I would say. And the internet, even 20 years ago, there was less freely available information in 2005. You had to pay for so much information in 2005, whereas today, there's very little you have to pay for because there's so much information freely available. So now, is it a curse or is it a benefit having all this information, because there's so much information that we have available to us instantly now? I don't know the answer to that, and I don't like to look back through rose tinted glasses and say, oh, it was better 20 years ago, because I don't think it was. Every period in time is just different, but that would be what I would say is the main thing. Yeah. I mean, look what we're doing here today in 2025. I'm doing a live broadcast on a social media channel with a camera live on. In 2005, that didn't exist, just so you know. Right. Thank you for the stream. Hi, DC. How do you handle consistent losses? Do you just keep talking your setup and let the math take care of itself over the long haul? Yes. Yes, exactly. You have to have trust in what you do and trust in your process, which I do. So if I go through, which happens a lot, long periods where I'm having losing trades because I've not banked a profit. I get plenty of trades that go into profit, but I'm not trying to snatch the profits at them. So yeah, it happens, and so yeah, I just have confidence in my process and just know. Partly that's because of the experience, because I've been doing it so long. I've just been doing it so many years that I just that I know that, oh yeah, just keep going, and and then I'll have that big winner or winning spell of trades, whatever. When you've only been trading a year, you don't have that confidence, so you just got to build it over time, and trust that it's going to come more and more. But yes, you need to trust in that. Oh, good, Gary. Good. Sorry, just seen your comment there. No, that's fine, Mikhail. Yeah, about your English, that's absolutely it's okay. Um, keep going. Yes, exactly. Yeah, I think the average trader who's successful. And now, don't get me wrong, there will be traders who become successful within their first year, but more. If you took 100 successful traders who have been trading, let's say, 10 years, probably a greater percentage of them will say, oh yeah, I wasn't really profitable until I was 3, 4, 5 years in. So coming back to you, yeah, you're only 19 months in, so keep at it, keep working at it, and it'll come over time, because the psychological side of trading is so important, and that just takes time. You can't master psychology in a book. And oh, I've just read this book, so therefore my mindset's okay now. Can't do it. It doesn't work that way. So, dear. Right. You can see you have the Cardano chart on the watch list. Any thoughts on it? Yeah, I wouldn't worry too much about my watch list. You've got to bear in mind, Durand, my watch list is most of what I'm doing is all the major stuff up here. Okay, so if you've seen, where's Cardano on? Oh, down here. Stuff goes into my watch list because people ask me, "Oh, Charlie, can you go and look at this market?" And then I'll put it in, and then I just leave it in the watch list. So I wouldn't read too much into it. I don't own Cardano. Funny enough, it's one of my personal friends, and he's owned it for years, way back. He bought it way back down here. So I keep an eye on it because I know that he owns it. So that's the reason. So no view on it at all. It's no other reason than that as to why. It's like a lot of stuff. A lot of these markets down here, all these crosses, I'm not trading these. I go through them in my community with my traders in Charlie Burton Trading in the trading room. But we're looking at them. People want to look at various markets like euro, pound, or whatever. But yeah, I'm not trading all these markets. They're not my watch list as things that I'm trading. Um, they're just what's the word? They're just on there for other people. There you go. Okay. I like that, Rogers. That's a nice comment. There you go. That's nice. Yeah, it does, DC. Yeah, exactly. Acceptance is a really big part of it. You have to accept that losses are part of the. Yeah, exactly. You're going to be wrong, even if you've got a 60% win rate, it still means that out of every trade, every 100 trades, you're going to have 40 losers, aren't you? So you just need to get used to it. And so in life, being wrong is seen to be a bad thing. In trading, think of it as fishing. You're You're fishing and you're constantly not getting a catch. The fish gets off the hook. And then now and again, you'll catch that fish. Think of it that way. You're just fishing. Sometimes you'll catch a fish, sometimes you won't. And yeah, you have to go through an acceptance phase that that's just the normal part of trading. Yeah. Now, you don't understand what good exercise is for psychology. Uh, read Mark Douglas's books, Mikhail. That'll help. Um, uh, when was the moment when it clicked for you and you became profitable? About for me, it was about 2.5 years in, Daniel. But even then, you don't stop learning just because you think, oh, yeah, things are clicking here. There's still you still evolve. I still evolved as a trader. So yes, I might have been get to a point where I felt, oh, okay, I'm more, I'm profitable now. My equity is rising, making new highs. But there's still always going to be periods where you're not. When I wasn't making money as well, and every time you have a drawdown, you think, is this it? Is that the last time I'm ever going to have a winning spell? Have anyone here ever felt that? You go into a drawdown and you think, am I ever going to come out of this? Yeah, that's that little bit of self-doubt creeps back in, and then you end up trading out of it and you go to new equity highs again. You think, oh, that was good. And then the next drawdown comes along and then you think, oh, is that it? Was I just lucky before? All this self-language comes around. So yeah, it took years and years. You get to a point where you think, oh, okay, I've got a handle on the technicals, but you still have to deal with the psychological side. And that was exactly the same for me. You still have to deal with the psychological side because there's still drawdown periods, there's still losing periods within all of that. And growth as well. Changing my trading style. As the years went by, my trading style changed and it will continue to change over the next 5 and 10 years. It won't stay the same. So, yeah. Can you play games? I'm not answering that question. I don't know. Gaming in front of charts. No, I'm not. That's not for me. Um, I was trading stocks when I started, individual US stocks. Yeah. No, I'm not going to recommend anyone on YouTube to learn trading. I've got a YouTube channel right here. Just learn my stuff if you want to. I don't what I find that fascinating. Do you think I sit here looking at YouTube channels on trading? No. So I wouldn't even know, and I'm not going to recommend any because I don't know people like that. So no. Um, is there a site I can visit that tells me what the kind of swap fees I'll be paying on a trade? For example, Eurodollar trade versus an Aussie day. Well, just go to a broker trade 1984. A broker will give you their. Oh no, sorry. Yeah, a broker will give you their swap fees. It's not a site because every broker has a different charging structure when it comes to fees. But yeah, you can approach any broker and ask them. There's not a site that I know of, no. But I've already told you, Tickmill are a very good broker. Their swap fees are cheap. Just go to Tickmill. They're a great broker. So I'm telling you, there you go. Yeah, they're really good. Or Pepperstone. Pepperstone, a good broker as well. Um, no, Mikhail, I've already answered you on that. I don't. Didn't I already talk about prop firms and say no, don't do it? And I've just answered all of that earlier on, half an hour ago. I'm not going to go back over that again. If you go down the prop firm trading route, you're a fool. especially after I've just told you don't do it and I've explained it all. I'm not going to go over it all again. If you missed it and you went out for a coffee, just come back and watch the recording. But I've already covered that off and I thought it was your question. So I don't think it's a good idea. It's like going to the casino. They always win. And there you go. Right. It's 8:10 in the UK here. I'm going to have to go because otherwise, as much as great fun as it is answering your questions, we'll still be here in another 3 hours' time. So if you came in late, do check out the analysis that I did in the first sort of 15, 20 minutes. Daniel, do I have a video on the channel? Yes. Check out the videos in the channel. And I think there's a video titled How I Trade. Check that one out. I don't know. I did it maybe a year ago, 2 years ago. I don't know, but it's on the channel. There you go. Right. Thank you ever so much for your time. It's been, as usual, the reason I wanted to do this session tonight was making sure that people don't go and blow up accounts and go and get too excited with all this volatility, plus give you some overall thoughts, my thoughts on the markets. Take it for what it is, but I wanted to give you my views on the markets at the moment and going forward over the months ahead, and really just impress upon people that people aren't out there all making millions and millions of pounds right now. It's not true if you get people telling you that sort of stuff, because I'm speaking to the brokers and they're just seeing loads and loads and loads of people losing money because they're getting excited at the moment. So that's why I'm trying to get people to not get overexcited. Don't feel like you're missing out. Stick to your plan. Don't worry about the noise. And on that note, I shall leave you to it. We'll be back soon. So we'll do another one at some point in the next month or so. Thank you for all your questions there tonight. Take care for now.